let's talk about the monthly bookkeeping process. Every month, the month ends. By the 10th or the 15th, you get 3 reports from your bookkeeper: an income statement, a balance sheet, and a cash flow statement. Now, some might be cleaner than others. Yep. We try to format ours so the average entrepreneur can read it. But anyway, you should be getting those 3, and you should have a monthly finance meeting on your calendar every single month that you don't miss for any reason. And if you want my agenda, you can go to accountsbalance.com/agenda. It's the same meeting Connor and I run every single month for the past 6 years. But during this meeting, you're going through all 3 reports and you're comparing this month to last month, this month to the same month last year. You're looking at trends, like is your profit margin going up over time, down over time? You're looking at stuff like software expenses and saying, hey, can I pay for stuff yearly? Can I cut it out? Yep. Do I need to hire more people? Whatever it is. While you don't need to learn QuickBooks, you do need to learn how to read an income statement, a balance sheet, and a cash flow statement. As an entrepreneur, that is a key skill. An income statement shows your profit and losses, your revenue minus expenses, how much you made or lost in that particular month. A lot of people, that's the only one they look at. And I would argue you should also be looking at your balance sheet and cash flow statement as well. But if you're going to look at only one thing, that is the one to look at. And you do need to know how you're doing every single month. And you want to compare it to past months as well. There's a lot of vanity metrics, as you know, in the agency space where you're a 7-figure agency, but you might not be making that much money profit. You might be losing money profit. And you got to know cash flow just shows the health of your business, asset versus liabilities. Do you have a lot of inventory, which a lot of agency owners don't, but you might have loans. You might owe vendors money or service providers money compared to how much you have. You might own some assets. You might own an office building or something like that. So it shows the actual health of your business in a snapshot. And this is a good thing to too, if you ever invest in the stock market. The income statement, the balance sheet, and the cash flow statement are things that you should learn how to read. With the P&L, you could have a month where you made 20 grand, and that's great on paper. But then you look at your balance sheet and you're in a lot of debt. Your liabilities are way more than your assets. Making 20 grand a month isn't going to claw you out of it because you owe $500,000 to different vendors, banks, whatever it is. Right. So the balance sheet just shows the overall health of the business versus the P&L. Very few people, if you're going to sell a business, are going to buy a business where even if the business is profitable, if you have tons of debt, for example, maybe they will buy the business, but they're going to leave the debt on your books and not take the debt with them. So there's lots of businesses out there that are profitable, but go out of business because they just run out of cash. And you see that a lot if you have got terms with vendors that are net 90, net 120, net 180, whatever it is. If you're not getting paid by your customers and you're continuing to spend money and have to pay your team and pay the different expenses you have, you can run out of cash very quickly. So if you're running a very cash positive business, free up, for example, we would always get paid by the clients. There would be a week delay before we pay the freelancer to allow for any disputes. And there was no debt in the business. We were pretty frugal. There's nothing there. So the cash flow statement in a business like that is less important because more or less it's going to look like the P&L every month. You might have a client or two that's late on payments, but for the most part, it's going to be the same. Whereas you deal with a lot of the e-commerce businesses that we work with, and they're paying vendors in different times. They're owing people money at different times. They might work with Walmart, who's got crazy terms, and they have all these sales on Walmart, and they're profitable on their P&L, but Walmart's not paying them for months. So they're running out of cash. So that's why the cash flow statement is so important. Having a report that's clean. If someone wants a sample of our report, they can go to accountsbalance.com/report, and bookkeepers will format these reports in different ways. For example, you could have all your expenses lumped together in one line item as expenses, or you could have them broken down into different line items. Neither one is incorrect from a tax standpoint or a bookkeeping standpoint, but the one that's broken down is going to help you make decisions. So this is something that you should be sitting down with your partner and going line by line and having this monthly finance meeting. You're going to be able to see what the changes are in your business over time and get really familiar with your business's numbers. But this is also something where, let's say that you might not be the strongest on the business side, or like you said, you're someone that comes in with not trying to be an entrepreneur, found yourself in there. That's where that business coach, that CFO, fractional CFO, outsource CFO, whatever it is, comes into play because they can take the numbers and give advice based on their experience. Hopefully you find a good one that can help you make those business decisions. Outside of that, you're relying on your own experience, your own research, your own networking, whatever it is, to make decisions based on what the numbers are telling you. I always recommend having a 3-4 month emergency fund at all times. And then you're looking at what your cash flow is per month. If it's positive 10K, positive 10K, positive 10K, that shows that you can either take money out of the business or invest it in something. If you've got that 3-month emergency fund, but you're losing 10K every single month, maybe your business can survive, and long term you're going for this bigger purpose that will eventually plan out. But it's also possible that you need to figure something out before you run out of money, and you need to plan accordingly, because the last thing you want to do is get into a habit of laying people off, hiring people back, laying people off, hiring people back. So that's just one very simple way of looking at it. And then in terms of trends, profit margin is the most underrated thing. And with FreeUp, that's something that we were so aware of. Even if we're having a good month, we want to see, hey, has our profit margin gone down 3 months in a row? Is it trending up? And that would decide whether we change our prices, whether we increase our fees, or, I mean, there's two ways to change that, right? You lower your expenses, or you increase your prices or increase your sales.